Day of love today. But do we love the chart? And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the Scruffy Trader. Now today is a good day, or at least should be. It's Valentine's Day. So it's the day of love. You never know, you could be in luck. Possibly not. But the charts, are we going to love them today? Well, that's a question. Because we're doing Morning Star still. But on Friday there was a massive news event, which there could be an aftermath today. And I've got to be very careful, especially because it's Monday as well. Oh, are you in love with me?
Yeah.
Are you? Oh. Are you going to do that thing for me? Does it involve a gold bikini?
Gold bikini. I haven't got one.
Even better. Day. Right. What we're looking at. Let me flick the screens on because I should have been at them already. Okay, we are going long this morning, and there was a thumper of a drop, as you can see, absolute screamer. And now it's tried to rally a little bit and it's pushing down again. Now this could be a flush out. So I'm just going to hang fire a little bit and see what happens. Okay. Now at the moment, Morningstar has performed very well. As you can see, we're on the home straight to doubling the account up to 1,000. Where did that come from if you haven't seen it before? Well, we started beginning of January, so it's not that long ago. Because it's only a few weeks to get this done. With 500, and we've been working our way through it. We took 17 positions last month and increased the pot by 55%. So that wasn't a bad profit. And the goal was to put 500 quid in over the course of 3 months. So we're now a little bit into month 2 and we're nearly there. Okay. So all we've got to do is 72 quid. And then the job is done. Okay. So happy days. So what I'm going to do is I'll come back to this a little bit later. I'm just going to leave the camera running because it's kind of coming into play. And we will be pushing this to the upside. And the idea is to just get in and out. You know, if you get 10 pips, that's a good trade for day trading. Compound it up, doesn't sound a lot, but you do 7 quid, 8 quid, 9 quid every day. Puts a decent amount in your account at the end of the month. And that's something that you need to think about with trading. If you're just chasing big money because you've seen a Lambo boy and you think that's the way it is, it's not. You know, you've got to be methodical and just grind your way at it. Okay, so let me do this and then I'll come back to you and we'll have a little chat about what we've been up to. Okay. Okay guys, we done. I'm being really conservative today. There's good reason, because I've got a feeling this might push down. So the idea was to get in a couple of times just for quick profits. Get in, get out. Get in, get out. Why? Because this thing can turn on a dime. It's Monday, so that's a problem to start with, but also there's a lot of uncertainty in the market, and my overall feeling is this is going up. However, if it decides to tank, the account won't take it, and it's that simple. So the safest thing to do is just get your basic target, get out, step away. And that way, you're not gambling. You've followed your rules. You've got what you need. And that's it. Very, very simple. So what are we doing? Well, there we are. We've got thick end of 20 quid out of the positions. We only look for 10 pips. So each one of these achieve that. So we've done the job. We've done what we need to do. Let's have a look, see what it's done to the results. So first one was 779. And we ended up putting 2 positions in. Same price, which is 11.62. So there we are. Not bad. I mean, it's only 20 to 8, so we've only been doing this 40 minutes. You know, so that is good, safe product, or good, safe profit, rather. And we've edged our account up. So now we only have to do 50 quid. You know, so it's all about being sensible, guys. And it really is. Now, tomorrow, we're up to 123, which is 62p a position. It's kind of what this is up here. I'm splitting it by 2 at the moment, and I'm looking at 62. The account will kind of take 95, but the margin's going to be pushing against us at the minute, so we'll just leave it at that. Okay, and yeah, I'm quite happy. We've achieved more than we need. It's good. Life is good. All right, so that is that. Pull the plug at the right time. Now you can decide to go back into it if you want. See, it's turning now, and there's the formation that you kind of see coming. Buff, out you get. And that be that. So, do it all again tomorrow. And see what the world has to offer. But what I'll say about Morningstar, or any strategy for that matter, whatever you're doing, strategy. Do watch Coffee with Scruff this weekend, because I'm going to touch on a lot of this. Everybody thinks it's strategy, and it's the perfect holy grail. It's not. It's about being sensible, target accordingly, and read the conditions of the chart. Now, if you just think there's a magic pill out there, you're never going to make it, guys. And I've got a lot of flack this weekend because I've said that a few times, that you're not going to make it, you know, and they don't like it. You know, maybe it's a millennial thing, being told no. I don't know, but you call it tough love, you know, if you want to call it that. If you're chasing the magic pill or the holy grail, thinking there's a secret room, everybody's got the key, and you're locked out, you're not. Trading is about being systematic and filtering out all of the noise and coming to an informed choice. There is no system out there, or certainly not one that I've seen in all my years, and it is just common sense. I think is, if you're looking for a holy grail, that's it. It's common sense. You know, when it comes to your stop, just be sensible with it. Needs to be out the noise, but far enough in that it doesn't kill the account. Common sense. If it is, and you look at it and you think, right, this is where I need the stop to be, not this crap of tight stops, just this is where it needs to be out the noise, and that stop will destroy your account. Your position size is too big. Common sense. So you reduce the position size but leave the stop where it is. Because one of the things that I see and hear all the time is, well, I can only afford 50 quid on the account, so I'll move my stop tighter. Well, you're just putting yourself in front of the freight train and offering yourself up for the market to take your money. A stop needs to be where a stop needs to be. It's that simple. When it comes to profit, you know, if you try and stretch it too far, the market mightn't have enough power to get there. And if it can't get there, what's it do? It goes the other way. So again, you're setting yourself up for a fall. Common sense. It's why your filters are important. Filter it down all the time and use the tools that's available to you. The basic tools, you know, you want your levels. You want your ATR to measure things out. Moving average, I'll give you a vague idea of what the market's trying to do, but don't trust it fully because it is lagging. And as a final point, when I say these clowns, there are no special moving averages. None. You know, stick to the main ones or a Fibonacci moving average and you'll be fine. You know, so it's a 5, it's an 8, it's a 14, it's a 20, 34, 50, 89, 100 and 200. They are the main ones. Okay, when you see all these daft people saying, oh, it's 87.4, overlay that on one of the major ones, like an 89, which is close to it, and see how far it is to it. They're nigh on identical, so it's just guff. Anyway, enough of me wattling. Do this again tomorrow. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.